This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Hello, everyone, and welcome back to Trade Alive with IUX, podcast by IUX Education. Today, we are going to deconstruct the single most powerful and often the most destructive force in financial markets. Now, you might think I'm about to talk about interest rates, or maybe inflation data, or perhaps the actions of the Federal Reserve, but I'm not. I'm talking about something far more fundamental. I'm talking about storytelling. You see, humans are, at a biological level, storytelling machines. It is how we are wired. From the ancient myths our ancestors told around campfires to explain the stars, to the modern news headlines we scroll through on our phones to explain the stock market. We have a deep, primal craving for narratives. We need to simplify the complex world around us. We hate chaos. We hate randomness. So what do? We invent stories. In the financial markets, this instinct goes into overdrive. Think about the last time you saw a massive red candle on a chart. What was the very first thing you did? You didn't just look at the price. You immediately asked, why? Was it the central bank announcement? Is it the election results? Is there a supply shock in oil? We feel physically uncomfortable with the idea that the market moved just because. So we invent a story to make the price action feel logical, safe, and predictable. But here is the hard truth we're going to explore today. This reliance on storytelling is a double-edged sword. As we look back through market history, we see a repeating pattern. Investors and traders rarely follow the cold, hard numbers. Instead, they follow compelling stories. They allow powerful narratives to drive entire market cycles, fueling the most euphoric bubbles and causing the most panicked crashes. This phenomenon has a name in behavioral economics. It is called the narrative fallacy. It's the trick we play on ourselves. We convince ourselves that because we can force a cause and effect pattern onto the past, we can somehow predict the future. And this, my friends, is the primary reason traders hold on to losing positions. They fall in love with the thesis. They fall in love with the reason they bought. And in doing so, they ignore the reality that the price is falling. Today, we're going to learn how to survive this. We're going to learn how to separate the comforting narrative from the hard data, and how to implement the best strategy to cut losses without regret. Let's really dig into the mechanics of this. Let's talk about the danger of anchoring. Now, it is well documented, and I mean hundreds of studies, that investors and traders tend to follow stories, not just numbers. Why? Because a compelling narrative is powerful. It simplifies complexity. The global economy is a messy, tangled web of variables, but a story is clean. Let me give you a concrete example. Let's create a scenario that I think many of you will recognize. Imagine a trader. Let's call him Michael. Michael reads a report on Sunday night. The report says the Japanese yen must weaken. The Bank of Japan is printing money like crazy, interest rates are negative, and the economy is stalling. Fundamentally, the yen has to go down. Now, this is a great story. It has logic, it has characters like the central bank, it has a clear cause, printing money, and an effect, a weak currency. Michael loves this story. It makes him feel smart. It makes him feel informed. So on Monday morning, he shorts the yen. He bets big that the yen will drop. And this is where the anchoring happens. Michael is now anchored to that view. He's bought the ticket to that movie and he wants to see the ending he was promised. But let's say on Tuesday, the market reality shifts. Maybe there's a rumor of a trade deal. Maybe a big hedge fund decides to take profit. Whatever the reason, the yen strengthens. The price starts moving against Michael. He's losing money. Now, a rational robot, a machine looking only at data, would say, the price is moving up, the trend is changing, my risk limit is hit, I must exit. But Michael is trapped in the narrative fallacy. He digs in. Why? Because he isn't trading the market anymore. He's trading the story. He starts scrolling through news sites. He ignores the 5 articles that say the yen is strong, and he finds the one article that agrees with him. He thinks the market is wrong. They don't understand the central bank policy like I do. Y logic is right. This price move is just noise. It's fake. Have you ever done that? I know I have. You sit there, watching your money disappear, telling yourself it has to come back down. The story makes sense. This is where the damage happens. The story becomes a shield against reality. It protects your ego, but it destroys your capital. It turns a manageable small loss into a catastrophic one. These narratives are what drive entire market cycles. Think about the dot-com bubble in the late 90s. The story was the internet changes everything. Profits don't matter, only growth matters. The story was true. The internet did change everything, but the prices were false. People lost fortunes buying the story at the wrong price. Or think about crypto cycles. This is the future of money. Great story. But when the chart breaks, the story won't save you from an 80% drawdown. The story feels solid. It creates a false sense of certainty in an inherently uncertain environment. And that certainty is the most dangerous emotion a trader can feel. I want to take a step back and look at why we do this. Why is Michael so obsessed with his story? It comes down to comfort. Chaos is terrifying. If I tell you the market dropped 2% today because of random selling pressure and algorithmic cascades that nobody can predict, that is a scary thought. It means you have no control. It means the market is a wild animal. But if I tell you the market dropped 2% because the inflation report missed by 0.1%, that feels better, doesn't it? It feels orderly. It feels like a math problem. We invent these stories because they make us feel safe. But here is the secret that professional traders know and that amateurs struggle with. The market does not care about your story. The market is simply a mechanism for price discovery. It is the aggregate vote of millions of participants. Some are smart, some are dumb, some are hedging, some are gambling, some are algorithms executing code. When you try to impose a logical narrative to that chaotic mess, you are essentially trying to put a leash on a tornado. It doesn't work. And this brings us to the most critical part of today's episode. If stories are dangerous, if narratives trap us in losing trades, what is the solution? How do we break the spell? Next, the antidote to the narrative fallacy is not to stop reading news. It's not to close your eyes and ignore the world. The antidote is to realize that there is only one story that matters. Every chart you look at is already telling you a story. It is the story of price. I want you to imagine a scoreboard at a basketball game. The narrative is the commentary. It's the announcers shouting, "Oh, this team has great momentum. They practiced hard. They want it more." That's the news. That's the fundamental analysis. It's interesting, sure. But the price is the scoreboard. If the announcers are screaming that Team A is better, but the scoreboard says Team B is winning by 20 points, you have to believe the scoreboard. A professional approach involves viewing the price chart as the only objective truth. The chart reflects the aggregate psychology and actual money flow of all market participants. It strips away the noise of headlines and opinions. So here's the strategy. This is how you cut losses without regret. This is how you stop being like Michael. You must switch your focus. You need to switch from the news narrative, which is what should happen, to the price narrative, which is what is happening. Let's go back to Michael and his yen trade. He shorted the yen because of the central bank story. The price starts going up against him. Instead of looking for news to confirm his bias, Michael needs to look at the chart. He needs to say, okay, my story says the price should go down, but the chart is making higher highs and higher lows. The scoreboard says the other team is winning. The moment the price hits his stop loss, the external story is irrelevant. This is the hardest hurdle for new traders. They think, but the central bank is still printing money. The reason for the trade hasn't changed. And I am here to tell you, yes, it has. The reason for the trade was to make money on a price move. The price did not move, therefore the trade is invalid. It doesn't matter why it hit the stop. Maybe a big bank bought. Maybe an algorithm glitched. Maybe the market just decided to be irrational today. It doesn't matter. It only matters that the price story has changed. By shifting your focus from why is this happening, external storytelling, to what is the chart telling me right now, price observation, you can execute your exit plan objectively. You cut the loss not because you failed. You didn't fail. You made a hypothesis and the market data invalidated it. You cut the loss because the market invalidated the trade setup. There is no regret in following the price. There is only regret in following a fantasy.
So let's wrap this up and package it into something you can take with you into the trading week. To summarize, we have to accept that we as humans are wired to crave narratives. We hate chaos. We want to explain market moves with simple cause and effect stories. But this reliance on storytelling often leads to the narrative fallacy. We anchor ourselves to compelling stories like why a currency must move or why a stock cannot fall, and we ignore the cold, hard data when the market disagrees. This attachment is the root cause of the biggest losses in trading. It is what turns a manageable scratch on your account into a catastrophic wound. The path to survival, the path to becoming a professional, is recognizing that every chart is already telling a story, the story of price. The most successful traders strip away the external noise. They view price action as the only objective truth. They understand that the best strategy to cut losses without regret is to prioritize the price narrative over the news narrative. If the price hits your stop, the trade is invalid, period, regardless of the headlines, regardless of what the experts say on TV, regardless of how right you feel your logic is. Success comes from trading what you see, not what you think should happen. So the next time you find yourself in a losing trade, arguing with the market, telling yourself a story about why it has to turn around, I want you to stop. Look at the scoreboard, silence the storyteller in your head, and finally, listen to what the market is actually saying. If this episode gave you valuable insight, you can click like, subscribe, follow, and share it with another trader who might need this reminder. In the next episode, we'll dive even deeper and explore more. Thank you for listening. This has been the IUX Podcast. Keep your charts clean, your mind clear, and your stops tight. I'll talk to you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.